an example would be because employee. So if you're talking about individual, right? So employee, you're working for a company, you're issued by T4. So like for employee taxes, is pretty straightforward. So every year you have to file your tax return, and then if employment income is your only source of income, and then you're taking your T4, right? So if you do other investments as an individual, like for example, you buy mutual funds or you have savings in a bank account, create interest income, you would expect to receive a tax slip. In a trust environment, you would expect to receive a T3 slip. And then if you have interest income in the bank, you will receive T5 slip. If you do investment in partnership interest, then you would expect a T5013. And then all that information needs to be incorporated in your tax return. And then it's a good way to engage your personal tax advisor to do some tax planning and compliance services for you if you think you're getting into a lot of different type of investment, especially not public company shares in terms of private equity investments. Then you want to deep dive into the tax implication. So that's individual, right? So if you're a corporation, then it's totally different ballgame. So you look at your business financial statements, you look at your balance sheet, your income statement, consider the expenses incurred by the business, which one is deductible, which one is not, and then ultimately, your tax at a different rate for corporate taxable income, right? So if you're self-employed, then you have ample of opportunity to do some tax planning. Like even if I work from my home, some of my home expenses can be deducted against my business income if I choose to be a self-employed person. So that's just some simple example for you.